Here are the top stories we'll be watching this week. Data will be out on the US economy, giving more clues about where Fed policy is heading. Air France KLM faces a threat of more strikes hitting the airline. The level of bad loans will be a key focus when China's banks reveal second quarter results, and China also faces criticism from the UN over racial discrimination. First, to the US, where economists expect second quarter US growth to be revised slightly lower when data are released on Wednesday, down to 4% from an initial reading of 4.1%. That would still mark, however, the fastest rate of growth in 4 years, fueled by consumer spending and business investment. Following the initial GDP release in July, President Trump declared it an economic turnaround of historic importance. He has levelled criticism against the Fed for raising rates and said the central bank should do more to help him boost the economy. Investors are now focused on the second half of the year, with some economists projecting 3% growth over the 6-month period. It remains uncertain also if trade will prove a drag on the US economy. The FT's news editor Peter Spiegel has this analysis.
Well, sometimes these figures can be slightly misleading. Remember, the second quarter figures of 4.1% that with the initial reading was gangbusters. I mean, when was the last time the US economy grew on a quarterly basis of over 4%, or any developed country economy for that matter, right, these days? The problem is that there is this dark cloud of trade tensions hanging over the US economy that no one really can quantify. Thus far, it has not hit the market, certainly, and we haven't seen it impact GDP figures or any of the ancillary economic figures. But the Fed has very clearly signaled it is worried about the way the trade war will impact the US economy going forward, and they're also concerned they do not have the firepower anymore to fight it if it does force the US economy back into a slower growth area. Obviously, they're moving towards normalizing rates, but they're not at that level yet that suddenly they can cut rates to an extent that it would help a US economy that is hit by a trade war.
On Monday, Air France KLM's restive French unions are meeting to discuss whether to continue their strike campaign. More strikes would be an unwelcome start for newly announced Chief Executive Benjamin Smith, who takes up the job at the end of September. Air France's unions have already taken industrial action on multiple occasions this year, costing €335 million in the first half. Their rejection of a pay offer led to the previous chief executive's resignation. Their Dutch counterparts, meanwhile, though welcoming Mr. Smith, are also considering strikes at KLM. Here's our transport correspondent, Josh Spiro.
I think the chances of the unions striking after Monday's meeting are pretty high. They've done it a lot so far, and nothing has stopped them. And it could be terrifically damaging to Air France KLM, because as a group it's not especially harmonious. KLM is supporting it with its profits, and Air France is actually losing money, so any more strikes are only going to make this a lot worse. The company has the French state behind it as a big shareholder, which makes the unions always think there'll be someone to bail them out. The problem is the French state might decide not to. That's risky for the unions, because if they don't, then the airline could easily be broken before the unions are.
Turning now to China. Its banks have over the past 18 months faced a clampdown from regulators, with rules to curb out-of-control lending and risky funding. This week we'll see clues about how this is affecting the sector when China's 4 biggest commercial banks post second quarter earnings, including Agricultural Bank of China, where investors will want to see how the country's 3rd largest lender plans to tackle rising bad loans. China also faces the possibility of more criticism from UN human rights experts. This week, the UN Committee on the Elimination of Racial Discrimination concludes a month of meetings where it has been examining reports on countries including Bosnia, Cuba and Montenegro. Concerning China, the committee says it has credible reports that the country has locked up more than 1 million Uyghurs in internment centres in the northwestern frontier region of Xinjiang. The FT's James King has more.
Uyghurs are an ethnic minority in China. They're mostly Sunni Muslim, and the United Nations report says that the reason that the Uyghurs are being locked up is purely because they're being treated as enemies of the state based on their ethno-religious identity. The UN statement also said that Xinjiang is resembling a massive internment camp. China, for its part, has rejected the UN criticism, saying that this is completely untrue. It did admit that some Uyghurs have been moved into re-education camps, and this was simply to put them right after they'd been misled by religious extremists. What's really interesting about this topic, though, is that at the moment it's only the United Nations which has made a criticism of China. As far as I'm aware, no other national government has made a criticism of China thus far.
And that's what the week ahead looks like from the Financial Times in London.